What is up, traders? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. This video, we're going to discuss Bitcoin, what we seen last week, and what we could potentially look for next week. So that sounds good to you. Make sure you stick around. First things first, right now, Bitcoin is showing us that we have a little bit of hidden bearish divergence on the chart. Hidden bearish divergence is when your oscillator is making higher highs and your price action is making lower highs. The oscillator is showing us that there is more momentum happening on the chart than what is actually occurring, and that is why it is called hidden bearish divergence. So with that hidden bearish divergence, we are looking for price probably to look a little bit lower. Let's get rid of the RSI and divergence. Let's talk about last week. Last week, you can see here that we traded as an inside weekly range. If I go over here to the weekly chart on the spot market, you can see big, nasty down range on last week's candle. This week, we traded inside of it, but on the CME chart, we did close lower than last week's close. Now, that doesn't really mean anything other than the fact that we got a lower weekly close last week. Now, if you look at the spot market chart, you can see that you have several bearish closes on the weekly time frames as of late. 1, 2, 3, 4, 5, 6, 7. This is the 8th week in a row on Bitcoin that we have been bearish. That is unprecedented. So a bounce is probably going to happen soon. Okay, also what we have here is a descending wedge or a descending triangle, whatever you want to call it. Doesn't really matter. I'm not a pattern trader, but whenever they are clear and obvious on the chart, I will show them to you. Typically, these things break out in the up direction, but we do have a ton of buying going on at these swing lows. So what I'm looking for potentially to happen is for a bear trap to ensue, a stab lower, if you will, to liquidate everybody that's been buying above 27K. If we do get that stab lower, like say down to 26 or 25K, not necessarily looking for this wick low to be liquidated, just under the previous support, which is going to be around 27K. So get a stab lower, potentially. Not exactly saying that this is what's going to play out, but I am going to keep my eyes peeled for this. Get that stab lower, create a bear trap, if you will, and then get that bullish break to the upside. Then we can look to target 34K, as that is the next gap on the CME chart. All right, so that's typically what I'm looking for this week. Let's go over here and look at the accumulation trend score. It is very important because this lets us know that we are indeed seeing accumulation happening. In fact, let me pull it out here a little bit better. If you look right here above my arrow, you can see where it says accumulation trend score and then 1. If you look down here, this legend shows you that 1 is the highest trend score you can receive and 0 is the lowest. 0 means there is no accumulation happening. 1 means there is a lot of accumulation happening. For the last 4 days, we have had a trend score, an accumulation trend score of 1, a complete 1, not 0.99421232 like this, but 1, 1, 1, 1. Lots of buying going on, and the accumulation has actually been going on since May 11th. Back over here to the spot market chart. Let's get over here to May 11th. There's the 13th, 12th. So this day here, people were buying on this day right there. So next day had the capitulation wick to the downside. Now, I'm not saying that this is the capitulation or this is the bottom. I do believe we go lower, but we do know that at these swing lows, either retail or prop firms and hedge funds are buying Bitcoin. Now, I am not going to be a buyer on Bitcoin until we get in the undervalued region, and the undervalued region is here on the MVRV Z-score. So let's go ahead and pull it out. Well, you know what? Let's pull it out to all. I know you guys have seen this chart several times, and this basically shows you fair value or when you're overpriced, and they do that by taking market cap and they divide that by realized cap. So market cap divided by realized cap gives you this orange oscillator. Now, this orange oscillator in the past has done absolutely perfect at marking swing lows for major trend change and swing highs for major trend change. very, very good. There was one time here, but it wasn't the actual market cycle peak, as in 2014 or close to 2014 is when we got the actual market cycle peak. So when you had this stage in 2013 and then a massive pullback, a lot of people mark that as a market cycle, but if you go in between your halving dates, you will see that these two peaks are indeed inside of one market cycle. And you did not get that. But every single market cycle, bear market low, after the halving, bull market, then you get your bear market, every single one of those in the past have been marked as undervalued according to this metric. Now, there was once back in March 2020, obviously, when we got the pandemic, that we hit undervalued once again. And obviously, that was the best buying opportunity we have seen on Bitcoin since March 2020. Now, if you come over here and look, it does look like we're starting to put in a little bit of a floor here, but we are not yet undervalued. We got a ways to go before this thing will be considered undervalued. Why is this relevant? It's very relevant simply because when we were doing this down here, everybody thought that that was going to be the bottom. And you got one stab lower, and that ended up being the bottom. Everybody was thinking that this was going to be the bottom, and there's that one stab lower. I just do not think that we are done yet going lower, but price oscillates like a wave. You get your waves up, you get your waves down. Price is never just moving in one direction. It is always fluctuating, ups and downs, ups and downs. So we got a nice big down move thanks to Luna's token falling completely apart. We did get this stab lower, and we are consolidating in a very tight range, very, very tight range. So since we are kind of looking for this thing to pop, we're going to basically be looking for that bear trap first. If we do want to be a buyer and we do want to target 34K, we definitely want to look for that bear trap first, as that will liquidate all the people that are accumulating at this line here around 28K. So stab lower, stop these people out, put in a bear trap, come back, find support, we buy that support, we target 34K. Now, if we get downside continuation and we get all the way down below this wick and we continue to go lower, then I will not be looking for that 35K target anytime soon. I will let price action form a bottom, if you will, but I do believe that, we could see something similar to that. One thing that I do know is that on this channel, we focus more on the intraday price action, as I am a day trader. If we go to the intraday chart real quick, you're going to see that on Friday, we got a down move, and that brought us right back down into that support. That main support that I'm talking about, if you're new to the channel, is this support level right here. This is your Q1 2021 opening range. That level is holding as support currently. We did get a daily close down below that region the other day, but that price action was almost completely engulfed. Actually was. The next day you did get a push higher, and now we're coming back in, finding support again. So choppy price action for next week. Maybe see a stab lower, maybe see a stab higher. Either way, you know the levels to watch for your trade entries. I think trading the range is going to be the thing to do for the next couple weeks, but we'll keep an eye on it. One other thing that I want to mention is this. Gaps don't have to fill. Here is the CME chart, and this is the gap that I am speaking of right here. So let's get rid of this. Let's get rid of this. Let's bring a line over here. Boom there. And then boom here. So this is the gap. It's a little over $1,000 gap. So this is my bullish target. Once we reach this region right here, this is where I will begin to look to be a seller again, looking for that capitulation, that final bearish leg to the downside. This could have been it. This could have been this. This was a complete perfect measured move of a expansion, consolidation, expansion. So we could have hit the lows, but I think we'll get one more push lower down into that green zone on the RVZ score. But gaps do not have to fill. Even though this is my target and this is what I'm looking for to play out in the coming days or weeks, gaps do not have to fill ever. Here is your SPY index. This is the S&P index SPY. All of these white lines are unfilled gaps in SPY's history. Now, I didn't get all of them. I was just trying to do this quickly right before the beginning of the video. But gaps do not have to fill. I am not targeting that gap because I think that all gaps have to fill. Neither am I looking for that $10,000 gap to be filled. That gap is only $115 wide. Bitcoin's spread gets over $115 wide many times during the day. That $115 gap at 10K is filled. please leave that gap alone. There is three unfilled gaps on the chart right now. The 26K gap was not completely filled, but it was halfway filled. There's a smaller gap under that at 18K and that gap at 34K. Those are the only gaps on the CME chart, and gaps do not have to fill. I can do this with every single stock inside of the New York Stock Exchange. There's 6 gaps right there that's never been filled and probably never will be filled. I know this one down here at $46 will never, ever be filled on the S&P 500. If it does, then that means the S&P 500 will have lost over 90% of its value and it will look like Luna. All right. And we're not looking for that to happen. That is an outlier. That is something that's more than likely not going to happen. But for the near term, for next week's range, we know using this weekly chart, we know where our targets can be, right? Just not because of the gap, because of price action. All right. So upside target 34K. Why? Because of the gap? No, because it's last week's high. Secondly, downside target 25K. Why? Because of a gap? No, because it's last week's low. Thank you guys so much for tuning in. Thank you for clicking on the thumbnail. If you're new, make sure you hit the like button. Make sure you subscribe because we are kicking this market's tail day in and day out. Thank you so much for being here. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.